example, an investment example we did. We did a reverse merger. We put $2 million into Rhino a couple of years ago with Bank of America Hong Kong and Pinnacle China Fund, and sat on it, and actually kind of, if we went out a little bit longer here, we did the deal at $4 last year. The stock, or even earlier this year, the stock got down as low as $2. It was a little painful. It wasn't trading that much, but the company kept doubling sales and earnings, you know. Meanwhile, they were kind of forgotten about with the investment community, and all of a sudden, this year, people woke up and the stock's at over 20 today. So that just shows you, you know, sometimes it's, you know, no pain, no gain. So you gotta.
Chinese management team, or is it a U.S.?
It's all Chinese management, and they only sell to the Chinese market. I'm beginning to think that if you're investing in Chinese companies, it's better to avoid the exporters and see the ones that, if they can do it there and so competitive, and if they're well run in a Western style management, I think a lot of Chinese companies that are addressing their local markets will do very well. And this is one example of that. Now the cool thing about them is they only sell to the steel business. One thing that I liked about this company is that they had a specific market, self-referencing. All the owners of the steel mills talk to one another. They have 5 or 6 products they go in and sell, from wastewater treatment to desulfurization to deoxidation. And it's just a much more efficient way to go. I was going to say, I don't know, have anyone heard of this Razor Technologies? They've got a geothermal system out. You've heard, a couple haven't. Anyway, they've been on in the press a lot, but they do. Not only do they do geothermal systems, but they're making cars too. And you've got to think, wait a second. You know, not only is the company not making any money, they can't even do one thing right, but now they're doing cars and geothermal. So it's something to watch out for. You know, look for companies that have an easy ramp. In other words, they're selling to the same customer. It just makes it a lot easier, a focused customer group with the same types of products. So that's what helped with these guys. It's actually listed on NASDAQ, so it's not an ADR. This is another example. Now, I said ethanol was terrible. Like, my investment, you know, as you know, stock picks are only good for about 24 hours. So you've got to manage the rest, right? How much do you buy? How long do you keep it for? What's your risk management, et cetera? So this is an example. I always hated ethanol, but then I got a call from management saying, you know, I think you should really look at this ethanol play. And I thought, well, you know, I'll look at it because there's a mandate that a certain percentage of gasoline's got to be ethanol. So I thought, now that so many companies have gone Chapter 11, I thought, maybe Green Plains, I should just listen to the management pitch. And it was really interesting because at the time when I talked to him, there were trailing sales were about $600–700 million. They're going to $1 billion, and their market cap was only $50 million. And they had a big play on that they thought they could, you know, through hedging, could kind of manage a tight margin and probably do, you know, down the road 40 or 50 million a year in profits. And their whole market cap was 50 million. They had me convinced, and they were buying assets from the guys going out of business at cents on the dollar. Because, like I said, if there's a mandate to produce so much ethanol and have so much in gasoline, someone's got to do it, even though all these companies were going out of business. So I thought, all right, well, we'll take a shot at it because I knew the sales were there, and we were able to buy this at about a little over $2, and it trades around $7 today. But literally, the ramp up happened in about 6 weeks, so it was a very quick turn. You know, they don't all turn out like this, but this is a good example. You just got to keep your ears and eyes open, use some logic. Sometimes you hit a nice winner like this. So. And that leads me to the conclusion that a desk is a dangerous place from which to view the world. So you want to be, this is John le Carre. I don't know if anyone's read any of his books. But you always want to get out and actually experience things going on. It's very hard to tell from what the media says or what the chart says. But if you go out and actually experience it yourself and you become a believer and have conviction, you can put your money into some of these companies that can be huge winners. And it helps you stay in them when they go through their volatile periods, or maybe they even go down right away. But if you know it, if you know a company's going to do well because you had a great experience with it, it's likely that's That's a data point far better than anything you're going to get from anyone else. So get direct experience. And if you're like clean tech, please go out and start to investigate putting some on your house. Do something yourself, or invest in companies. Start to get involved with the market. That's in any market you do. It's not just clean tech, but any market. Get involved. So this is what we use when we evaluate. In terms of evaluating a company, is it a commodity? Solar panels, I knew were a commodity in 07. We got completely out of that market at the end of 07. You saw how they dropped. My only regret is we didn't short some of those stocks. That was a huge win as well, if you could have done that or bought puts. Is there a technical edge the company has? Again, NanoSolar, pretty much a commodity product, but they have a big technical edge, so that's why I like them. How long will the edge last? It's uncertain with First Solar, with NanoSolar, but I think they've got a pretty good edge going out for several years. And how long will the subsidies last? Because that's a big thing in clean tech that we've got to look at. How long are we going to have government support for these things? And that'll tell us. Because some of what happened in early 08 was the Spanish market had a lot of subsidies, and with their economy tailing off, they cut a lot of their subsidy back. And it curtailed demand in Spain, which then reverberated throughout the whole industry. So you got to know what's going on with government policy to be investing in this business.